It's about that time of day again. My name is Joseph. It's already Tuesday evening, June 6th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and DAX tonight. Crude is bullish with a spike in channel ahead of the critical inventory report tomorrow morning. So looking for a two-legged pullback to support levels for the most reliable buying opportunities on Wednesday. S&P is range-bound and trading sideways tonight, telling us to focus on failures to buy the low, sell the high, and use that two-try rule tomorrow. Gold is bullish as it tries to finish the move to 1,300, but we have a trading range telling us to wait for traps or a successful breakout pullback tomorrow. Can't forget about the euro. The euro is bullish with a spike in range as well, and we have two resistance levels overhead that are telling us to avoid the breakout and focus on traps in Wednesday's session. FDAX is bearish with this big spike in channel down. Never a dull moment on the FDAX, which tells us to use the battle zone resistance levels overhead for traps and failures tomorrow. Boy, oh boy, markets were a little bit fussy here today. Had a great day today in our trade room. As choppy and sloppy as the markets were today and as low volume as they were, if you followed the plan, you had a great plan of attack for today's session. We get a great session setting up for tomorrow. Tomorrow's a Wednesday, hump day, as we go into the meat and potatoes of the second week of the month of June. Hope you guys are having a great day out there so far. Let's jump into our newsletter. But before we jump into the charts for tonight, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link. Come join me on the blog at Sideways Markets for the full-length version and all 5 markets. While you're here, don't forget, join the mailing list. Don't miss a newsletter. I'll send you an email every evening when our nightly newsletter goes live. In the lower left-hand corner, right in the lower left-hand corner, follow me on social. StockTwits, YouTube, Twitter, Facebook, all the channels. I'm always posting important charts and links throughout the day and week on my social media channels. Don't forget to grab those charts right below the video tonight. Grab those charts. Have those charts from tonight's video on your desktop for tomorrow. How easy is that? All the charts in tonight's video, follow that link and download those for tomorrow. And don't forget to grab your free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. If you haven't done it yet, grab that free pass yet and come out and join me as a guest in the trade room for a few days this week or next week, whatever's convenient for you. Grab that frequently asked questions, learn more about the who, what, where, when, and why. And please don't forget, I'm always here to answer all your questions if you have any along the way. Hit me up on that live support tool on the right-hand side of the website. Boy, it's been a great week here so far, but we got a big day coming tomorrow. Let's get ready for it. Tomorrow's Wednesday, June the 7th. Looking at the news tomorrow, this is really shaping up to be pretty much your typical second week of the month. Not a lot of major news. We got a kind of a peppering of small stuff. We got the ECB announcement, of course, later on this week. We got the whole Comey testimony, which I'm sure will have everybody watching the tube right on Thursday morning as well. And of course, into that the second Friday of the month. So other than that, not a lot of big stuff happening this week. Tomorrow, of course, the focus shifts to the inventory report. That's pretty much the big news of tomorrow morning. Besides that, we get some minor news from the GDP from Australia tonight. We got some minor news from the home prices in Great Britain tomorrow morning. But pretty much the bulk of the news tomorrow is all revolving around crude oil. We saw a pretty big reaction today. We'll be prepped for that tomorrow. Other than that, though, keep in mind the S&P loves to kind of sympathetically move with crude when inventories come out on Wednesday mornings. But that's pretty much the only major news tomorrow. If you're trading crude, if you're trading the S&P, you do want to be aware of that major news report around 10:30 a.m. My cutoff on crude oil is always 10:15 ahead of that number on Wednesdays. And then depending on how long it takes after the news comes out, sometimes it's 5 minutes, sometimes it's 10 minutes, sometimes it's 20 or 30 minutes after that kind of chaotic price action slows down. You know me, I'm not a big fan of trading the news, right? So step aside. There are so many reliable times every day, every week that we can be finding profitable trading opportunities. We just don't need to dilute ourselves and put added risk on the table by chasing after news. Hope you'll listen to me on that, so be careful around the news tomorrow. Definitely 15-minute cut. cutoff ahead of that news tomorrow, and then we'll play it by ear in the trade room tomorrow morning and see how the reaction goes, and we'll trade according to that. Speaking of the trade room, don't forget to come out and join me as an advanced member. We open up our trade room every morning at 8 o'clock Eastern time. I look forward to seeing you guys there. Let's keep going. Over onto the charts here tonight, we got some crude, S&P, gold, euro, DAX tonight. Yeah, crude is bullish, just a little bit, ahead of tomorrow's inventory report. And this spike in channel tells us to look for traps and failures after a two-legged pullback off these recent highs. The most important thing to remember is that the best price action tomorrow will be ahead of 10 a.m. Eastern time, so get to it early. Now, a couple things about tomorrow's session. First of all, you'll notice in the lower right-hand corner of this chart, I've given you guys the crude oil inventory levels for Wednesday. Now, I'm also going to post those levels below the video tonight. Scroll down below the video. There's a link that says click here to read more. That will give you the entire report here for tonight's newsletter, and you'll find all of these inventory levels for support and resistance tomorrow. They're only good for tomorrow, right? At the closing bell, 2:30 p.m. Eastern time, the old pit session, that's when these levels will be worthless again, right? So we got about 24 hours to use them. They do create very reliable short-term support and resistance. And again, you can write them down. If you follow me on Twitter or Facebook, I put them up there. I put them on StockTwits a few hours ago as well. So if you follow me on social, you'll have those already right on your social feed. And of course, don't forget, we're going to plot these levels tomorrow and use these levels tomorrow with all of our clients in the trade room. So make sure you're aware of those tomorrow, short-term support and resistance levels. And let's jump right in. As you can see here, the day started off today with, really for the most part, the bears sold high once, the bears sold high twice. If you recall from last night's newsletter, we were coming out of what I called, right, a bear flag. Remember we talked about this last night, how to tell the difference between a reversal and a pullback, right? This is clearly a pullback, not a reversal. And so we're looking to sell on the way back down. Well, that didn't last very long. By the time we came in here, 8 o'clock Eastern time in the U.S. session, this market was sideways, right, with a capital ways. It was definitely flat, very quiet. I love these environments. I personally really enjoy a range-bound market. They're rare. They don't happen very often. We're going to see one in the S&P as well here in a second. Buy low, sell high, avoid the middle. It was a great session. It was a great session. And then all of a sudden, right, we see this, right, this explosion, right, to finish off the morning. And then, of course, that led into what is ultimately the reaction to this afternoon's API inventory level. Now, the most important information right now is this spike in channel. A spike in channel is pretty easy setup. It's one of the, I would put a spike in channel in the top 5 patterns that every trader should learn because they're reliable and they happen frequently. Most important thing about a spike in channel is that by the time we see the spike in channel, everybody's already long. And when everybody's long, we know there aren't going to be any more buyers left to buy, and we'll have to wait for a pullback. Most important thing about a spike in channel, when you see a spike in channel, if you're unable to get to it during the spike, or you're unable to buy the first 2 pullbacks in that channel, the rest of this stuff is kind of frothy, you know, it's very much overbought. And again, by then, everybody's already fat and happy, right? The pigs are already, the bulls are already in, right? And we don't want to be piggish, right? We don't want to be greedy up there. And so we know that a lot of buyers stop buying up there and they start waiting for a pullback. The most important thing about a spike in channel is trap low, nice deep pullback. And when it pulls back like that, there's a bunch of different variations, right? We may get two-legged pullbacks, trap lows, seller failures. We want to see the market pull back nice and deep because that's what it's going to take to attract more buyers. Now, that's also where, and this is rare, but we do see it every once in a while, right, where those buyers can't hold it and the market fails, right? We have news coming out tomorrow. If the market does fail, watch the beginning of that move, and that becomes the objective for the sellers. Now, obviously, we're a ways away from being a bear right now in this market, but that's the goal, right? If it does fail. So bottom line is, back to our chart right now, here is my spike and channel. And whenever I have a spike in channel, again, I always look left and I think, okay, where can I find some prior swings, prior swing, right? We'll call that the battle zone. And so now, ideally, we'd like to get this price pulling back. Now, it's a pretty big distance going from the high down to that swing. Whenever we have a really deep pullback, it usually ends up being some sort of what I call a two-legged pullback. And that is some sort of trend line comes in, and we can use that trend line. So we'll keep an eye out for that here in the overnight session. Try to use that trend line as support. Try to use that 77, 74, and 56 area as support as well. Now, in all reality, right, it may just pull back and give you a seller failure, right? That would mean, of course, deep pullback off the high, moving average comes over, sellers try to sell the pullback, right? And of course, that tells the buyers where those seller stop losses will be and allows them to buy the failure, right? Order goes right there, right? So pretty simple there. Let those sellers kind of wrap the noose around their neck, right? And then take themselves out. That's another option as we go lower. The best buying opportunities on a spike in channel always come back at prior support levels. But you know what? This is major news we're talking about. The API report every Tuesday at 4:30 p.m. Eastern time. So what if price continues to push higher? What do we do if price continues to scream higher? Well, I would describe this market as being quite high, right? Relatively speaking, it'd be a pretty expensive market. And as we talked about in last night's newsletter, whenever I find myself in a position where I have to buy high, I have no choice but to buy high or do nothing at all, I always want to think about traps. So if we do end up going back up to retest the high, the double up resistance, right? The prior day high is waiting there. I don't want to buy into that high. I'm looking now for traps. And traps will usually come in the form of two-legged pullbacks below prior areas of support, right? Maybe we can use those swings right there. The bottom line is that if it does keep pushing higher here, don't chase after it, right? Whatever you do, don't chase after it. That's not a reliable way to trade. It's all about long-term probabilities, right? We're not trying to go for one trade at a time. We're trying to remember we're going to take thousands of trades in our career, and we want to make sure those trades have the highest reliability. So as it goes up, don't chase after it, right? Trap low, two-legged pullback. Just keep trying to buy low, and then boy, I'll tell you, this could really get crazy here if it keeps going higher here. This could easily start setting up here for a large measured move here tomorrow. There's a couple levels up there around 50, right? The prior week high, right, is up around the 50 area. So things could get a little bit rambunctious tomorrow ahead of that news or after the news tomorrow. It's very much right a coin toss right now. It all depends, though, is that if we can get back to that high. Remember, a lot of times you see a real strong move, deep pullback. It then returns back to the high, but then we don't see any follow through. If that's the case, just keep waiting to buy the dip, right? Don't try to trade through the high. But if it comes back to the high, and we're going to talk more about this as we go here tonight, as it goes back to those highs, if we're seeing this market blow through that high, now we know, all right, it's on, right? Looking for a larger measured move, looking for a larger channel, right? And then, of course, the plan at that point is to buy that fake out, breakout, pullback, which we'll talk about more details in just a moment. We got a couple charts tonight. We'll talk more about that as we go. So right now, I want to buy the deep pullback to retest the high. Right now, the objective for the buyers is to go back and retest the high. Once we get back to that high, then look for more information. Do we fade off the high to buy it again, right? Do we fade off the high and reverse? Or do we keep going through the high and then look for that breakout, that what I call my fake out, breakout, pullback, which we'll learn more about in the advanced classes. And of course, talk more about this in a few moments. So like to get a deep pullback. Hopefully we get it. We may not, though. Again, we're coming out of major news here right now. And one of the very interesting things in this chart, though, tonight, I have to say here, is you'll notice we barely missed the prior day low. We barely missed the prior day high. This market coiled up like a spring here today. Very, very interesting price action. Very, very interesting price action. We had some news in the Middle East here this week, which is very interesting too, because normally if we heard about the unrest in the Middle East, which we heard about this morning, the overnight session, if we heard about that 3 or 4 years ago, basically before the collapse off 100, this market would already be at 55, 60 right now. So it's very apparent here right now, the OPEC curse, that's wearing thin, right? It's pretty clear to see. Anyways, we'll talk more about that tomorrow in the trade room. I want to make sure I mention that here today. What really we were expecting to have happen, we heard about Qatar, really didn't manifest today, which is very, very interesting. So we'll see what tomorrow brings. But very interesting, prior day high, prior day low, not tested. Again, buyers want to buy that low, back up to retest the high. Deep pullbacks. If it does go higher, your job is to focus on traps rather than chasing after that move. Let's keep rolling. How about some S&P? The S&P is range bound and sideways ahead of contract rollover later this week, telling us to use range rotation to buy the lows, sell the highs, and avoid the middle while we focus on failures tomorrow. Guys and gals, I want to thank you so much for tuning in tonight on our nightly newsletter. If you want to learn more about what it means to be a client here at School of Trade, we teach and trade this stuff every day in our trade room. Our advanced members join me every day in our trade room at 8 o'clock Eastern time. Check out the website at schooloftrade.com. If you're watching the video right now on our YouTube channel, there's a link in the description of that YouTube video. Follow that link. Come here over to the website at School of Trade. Learn more about our beginner, intermediate, and advanced level membership. And of course, please don't forget, as far as I'm concerned, we get the best free trial in the business. Make sure you learn more about how we trade by joining that free trial. You'll learn a ton for free here with me on the website at schooloftrade.com. Join the free trial. Keep in touch. We're always here to help out with any questions you might have along the way. And you know how we do it. I'll see you guys tomorrow, 8 o'clock Eastern time with all of our advanced members. If not, same time, same place tomorrow. You got it. Adios, amigos. Bye-bye for now.